Both have created wealth for millions of people, yet they are very different in nature. Some people swear by real estate, while others believe stocks are the true path to financial freedom. The truth is, each has its own advantages, risks, and long-term potential. In this video, we will break down the differences between real estate and stocks so you can decide which one is better for you. Investing is about building wealth, securing financial stability, and preparing for the future. Whether you choose real estate, stocks, or a combination of both, the key is understanding how they work. Real estate is a physical asset that you can see and touch. Stocks, on the other hand, represent ownership in a company. These differences shape how they generate income, grow in value, and fit into your overall financial strategy. Let's take a closer look at both. Real estate has been a traditional wealth building tool for centuries. It provides investors with tangible assets such as land, houses, apartments, and commercial buildings. One of the main benefits of real estate is rental income. By renting out a property, you can generate consistent cash flow month after month. This makes real estate appealing to people who want steady income in addition to long-term appreciation. Another advantage of real estate is leverage. Banks are often willing to lend money to purchase property. This allows investors to control a large asset with relatively little upfront cash. If the property value increases, the returns can be significant because of the leverage effect. This ability to borrow and grow wealth is one reason many millionaires invest in real estate. Real estate also provides tax benefits. Owners can deduct mortgage interest, property taxes, and depreciation. However, real estate has its downsides. Properties require maintenance, repairs, and management. Dealing with tenants can be stressful and time-consuming. Vacancies can lead to loss of income, and unexpected expenses can hurt profitability. Real estate is also less liquid than stocks. If you need cash quickly, selling a property may take months. Now let's turn to stocks. Stocks represent ownership in a company. When you buy a stock, you become a shareholder in that business. Stocks can generate returns in two ways: capital appreciation and dividends. Capital appreciation happens when the stock price goes up over time. Dividends are regular payments some companies make to shareholders from their profits. One of the biggest advantages of stocks is liquidity. You can buy or sell stocks almost instantly through a brokerage account. This makes it easy to access your money when you need it. Stocks also require less effort compared to real estate. You don't need to manage tenants or fix broken pipes. Instead, you simply invest and let the company work to grow profits. Another advantage of stocks is diversification. You can spread your money across different companies, industries, and countries. This reduces risk and increases the chance of steady long-term returns. With real estate, diversification is harder because properties require larger investments. Stocks also offer opportunities for passive investing through index funds and ETFs. These funds track the market and give you broad exposure with minimal effort. Stocks also tend to outperform real estate in terms of long-term growth. Historically, the stock market has returned around 7 to 10% per year after inflation. Real estate typically grows at a slower rate, although it provides steady income. Emotional decisions during downturns can lead to losses. Unlike real estate, stocks are intangible, which makes some investors uncomfortable. You also have less control since you depend on company management. For some people, this lack of control makes stocks riskier than real estate. So which is better, real estate or stocks? The answer depends on your goals, risk tolerance, and time horizon. If you value stability, cash flow, and tangible assets, real estate may be a better choice. If you prefer liquidity, diversification, and long-term growth, stocks may be the way to go. Many successful investors choose to invest in both. This way, they enjoy the stability of real estate and the growth of stocks. Let's look at some key comparisons. In terms of accessibility, stocks are easier to get started with. You can open a brokerage account and invest with just a few dollars. Real estate usually requires a large upfront investment and a mortgage. In terms of liquidity, stocks are better because they can be sold quickly. Real estate is harder to sell and involves more transaction costs. When it comes to income, real estate has an advantage through rental payments. Stocks can provide dividends, but they are often smaller than rental income. For long-term growth, stocks generally perform better because of compounding returns. Real estate grows steadily but usually at a slower pace. Stocks give you less control because company decisions are made by executives and boards. Risk is another factor to consider. Real estate carries risks such as property damage, tenant issues, and local market declines. Stocks carry risks of market crashes, company failures, and volatility. Both require careful planning and risk management. Real estate investors can use deductions and depreciation to lower taxes. Stock investors pay taxes on dividends and capital gains. Long-term investments in both can provide tax advantages, but real estate often offers more deductions. So what should you choose? If you enjoy hands-on investing and managing properties, real estate may suit you better. If you prefer a hands-off approach with flexibility and global exposure, stocks may be ideal. Your personal financial situation, location, and goals will determine the best path. It is important to remember that both real estate and stocks can build wealth. There is no one-size-fits-all answer. The best choice is often a mix of both. This way, you can balance stability with growth and create a strong portfolio. Diversification is the key to reducing risk and increasing long-term success. As we look at the future, both real estate and stocks will continue to evolve. Technology is changing real estate through online platforms and digital property management. The stock market is becoming more accessible through apps, ETFs, and robo-advisors. Investors today have more opportunities than ever before. The real challenge is choosing wisely and staying consistent. Thank you for watching this video on real estate versus stocks. We hope this breakdown helped you understand the pros and cons of both investment types. If you found this video helpful, please give it a like to support the channel. Don't forget to subscribe to the channel for more videos on investing, finance, and wealth building. Turn on the notification bell so you never miss an update.